Greetings, members, one and all of the Salivation Nation. All of the precious metals take a deep dive, but this metal soars. Let's explore. Indeed, we're looking at a pretty big drop in all of the metals here. We're going to take a look at the charts as of the recording of this video momentarily here, but let's find out exactly what's going on and why it's happening. Gold price is down 3%, silver price tumbles 5%, and this is due to selling. The markets took a major hit on Friday as technical selling pressure accelerated the move lower across the board. Gold has dropped more than $50, while silver was down $1.30 on Friday, with investors digesting higher U.S. Treasury yields and a rising U.S. dollar. The 10-year Treasury yield rose above 1.6% overnight, which is the highest level in a year. Meanwhile, the U.S. dollar climbed higher, with the U.S. dollar index last trading at 90.89, which is up 0.83% on the day. For gold, this culminated in a drop to fresh 8-month lows. Wow. And it's too bad because I just had bought gold the other day when what I thought was a pretty good dip yesterday. But nonetheless, this dip today is certainly quite noticeable. So April COMEX gold futures were last trading at $1,725.30, down 2.82% on the day. Silver also plummeted nearly 5% on the day, with March COMEX futures last at $26.32, down 4.77% on the day. Gold is continuing to face massive headwind from the bond market. Yields on 10-year U.S. Treasuries climbed yesterday to peak at 1.6%. They had still been just 1.3% when the week began. A surge in yields of around 30 basis points in the space of just a few days is a bitter pill for gold to swallow, as it does not yield itself any interest. This is explained by Commerce Bank analyst Carson Fritz. And, we've seen the great demand for precious metals out there, physical precious metals with very high premiums. And, of course, with these prices going down, I wonder if people will get discouraged by this, especially for silver, as it takes a bigger hit. We'll look at that momentarily. The main issue for gold here is lack of interest, said strategist at TD Securities. The Fed's reactive rather than proactive approach to the steepening of the yield curve is sparking a sharp rise in real rates. And while the safe haven properties of the metal, yellow metal, can offer support, gold as a safe haven doesn't bode well for investment flows into gold, the strategist said on Friday. Until the Federal Reserve signals that it will consider yield curve control, the gold price could continue to suffer. The Fed is testing the rates market, which may in turn force the market to test sky-high asset valuations, which may in turn add pressure on the Fed to move back to a proactive approach and curb the steepening. Yet, that is unlikely before real rates rise enough to harm gold in the process. We're now heading in the direction of this pivot point, but it's still early, the strategist added. For some reason, the market remains unconvinced that the Fed will be sticking to its ultra-loosening policy in light of the rising yields. And again, some people are screaming at the screens right now. This is an example of what's going on with manipulation, because no one foresaw this coming. Although we did talk earlier that we may see gold and silver fall before it goes back up again, but is it a coincidence that this is right around the time of the decision with the COMEX and delivery options? I don't know. It goes on to say that what is remarkable is that bond yields are continuing to climb sharply despite Fed Chair Powell having made it clear this week that the Fed will be sticking with its ultra-loose monetary policy for quite some time yet. It seems that the market does not believe the Fed, or its fears that the Fed is making a policy error and underestimating the rise in inflation, he said on Friday. If this turns out to be the case, gold would therefore rise all the more steeply. That said, things look pretty bleak for gold in the short term. And again, it moves back to deliveries in COMEX, especially with silver, as it's taken a bigger hit. We talked about how usually silver follows gold. Well, this time it may be that gold is following silver. It's loose, especially depends on what your stance is on manipulation. We'll see how this says. If this trend continues, gold will register its 6th monthly loss from the past 7, said FXTM market analyst Han Tan. With rising treasury yields dealing a blow to the non-yielding precious metal, bullion's year-to-date losses stand at 7.12% at the time of writing. Despite the threat of rising inflation, investors are clearly willing to ditch gold in favor of other assets that can be better ride on the economic recovery's coattails, as well as a subsequent overshoot in prices. And I don't discount that as a possibility as well, as we're seeing many people now getting back into GameStop is now going up again. So it looks like the Wall Street bets folks are in full force again, based off apparently they got a new CEO or something. And also we'll see Bitcoin has made record highs as of late. And so there is certainly some interesting situations going on in those worlds. Now, you know my feelings on manipulation. I believe there is micro manipulation as opposed to macro manipulation. And I will leave you to yesterday's video where I defined those terms. The terms are basically I made up that I think accurately describe my position, because I'm not saying there's not manipulation going on. But for those who believe in macro manipulation, well, this may tell us, this chart here may give us an indication of more bolstering your case, at least anecdotally. Because look at all of these metals. They are down all across the board, with silver taking the biggest loss today. In fact, it's kind of recovered some of its losses. It was down well over $1 earlier in the day, but it is well under $27 now, and over a 3% decrease. Gold is recovering some of its losses earlier too, but it was down almost $50 earlier in the day, but 1731.90 here, as the market is still open as of the recording of this video. Platinum is down almost 2.5%. Platinum is now $1,187 in the ask price. It was up over $1,300 before. Now palladium is down $44. Look at that, down almost 2%. But look at what metal is shining. Yes, indeed, it is rhodium. Because rhodium is not traded in electronic form, from what I understand, it's an exchange-traded fund, that is. Rhodium stands alone. It is up over 6.67%. Its price increase on the day is more than a full ounce of platinum has been added to the price. $1,500 increase to a record high of $26,000, a bid price of $24,000. And so it is interesting to see this big movement. I may call some of these dealers and see if they would still honor that bid price. Who knows? It is amazing to see rhodium's move in this direction. Another record high. It keeps soaring no matter what happens. It's crazy. Crazy indeed. As most of you know, I have an ounce of rhodium in my collection here. This is an image of what the bar looks like. You've seen it on my channel. I will post this video, and others are in a playlist of my journey with this rhodium bar. I've shown it when I first bought it for $1,100, and now it's way up. But let's take a look. What's going on with rhodium? It surged past $25,000. And this is so yesterday, literally 25th of February, on tight supply and strong demand. Indeed, My guess is I probably wouldn't have trouble selling the bar, but I'm not going to do it. Not this point in juncture. And if I had two of them, I would sell one, but I'm one of these collectors that likes to hold on to something, and who knows? At this rate, it's probably likely to go up than down. Rhodium base prices surged above $25,000 on February the 25th for the first time ever amid supply tightness, an existing deficit, stricter emissions regulation standards implemented worldwide, and a strong demand from China and Europe. The precious metal has been on a multi-year bull run, rising 47% in the year to date, as well as being up 40-fold since August of 2016, when it stood at $625. And it was around that time, you can check the playlist as to when I bought that. I bought it near the low, and of course it was about a $500 premium on it when I bought it, because it's a very rare metal. Johnson Matthey, the largest secondary platinum group metal refiner in the world, said its rhodium base prices stood at $25,450 an ounce, up 11% on February 18th, while refiner Engelhard Material Services, BASF of Germany, stood at $25,300 an ounce, up 10% on the week. Rhodium has only a handful of industrial uses in the chemicals and glass sectors, and nearly 80% of the annual demand comes from the global automotive industry, which uses the metal in catalytic converters. Of course, also we know palladium is used there as well. And it's hard to substitute in these applications due to its unique physical and chemical properties. And we talked about how palladium is a better catalyst than platinum, which in some way I kind of find hard to believe, because platinum is the densest of all the platinum group metals, and I would think that would work to its advantage as a catalyst. So we have a robust demand and a supply disrupted. It's all about supply and demand, and that is the case with rhodium here. The robust demand has been largely tied to increased nitrogen oxide legislation globally, particularly in China. The Chinese auto market is the largest gasoline market in the world, with China's light vehicle sales being about 90% of gasoline engines. On the supply side, COVID-19 severely disrupted South African supply in 2020, resulting in an estimated loss of some 130,000 ounces, according to Johnson Matthey. Total world primary supply of rhodium in 2020 came to only 583,000 ounces. Rhodium is a byproduct of platinum group mining, or metals mining, and supply is largely tied to South Africa, which accounts for around 80% of global mined rhodium supply, produced by a small number of companies. South African research firm Free Foresight's head of precious metals, Pearson Miriri, speaking during the company's Southern African Commodities Outlook for 2021 on February 25th, said rhodium accounts for less than 10% of South Africans' PGM production, but for some of the producers, it has contributed to more than 50% of their revenues. We expect that going forward, the prices will continue to grow, but the supply response will be limited because rhodium is generally found in lower quantities, and it will be difficult to target it more, obviously, because the longer term is trend away from UG2 ore bodies. So processing challenges we see. The world's largest producer of refined platinum, Rhodium, Anglo-American Platinum, said that Rhodium said the repair of its Anglo converter plant, Phase A unit, was at its Watervolt smelter complex, was completed in November, with ACP Phase B unit continuing its full rebuild and scheduled to be completed in the second half of 2021. However, a key question is the extent to which Amplant's processes challenges have disrupted global supply and demand, and how, as well as when this will normalize. South Africa's refined capacity is expected to be operating close to normal this year, and Amplant successfully fixed its refinery capacity issues in their main plant. Maruri said refined output should be boosted by processing of stockpiles. Amplan said that as a result of the ACP processing interruptions, there was a buildup of work-in-progress inventory of around 1 million PGM ounces, with the buildup of inventory expected to be released by the end of 2022. So yeah, we'll see new production. Another key question is how much higher PGM prices incentivize new platinum group metals as well as rhodium primary production, and how much can be added by when. At Free Foresight's, Maruri said that some of the projects have been abandoned or canceled, such as Stillwater's Siboney's Q4 projects are now coming back into play with other producers. So who knows? Let's see. This could cause the prices to go back down, but it's hard to say. There's no quick ounces here. The subject of reaching full production, this was echoed by Nedbank's analyst Arnold van Graan, who told Platts that in terms of restarting processes, there's no such thing as a quick ounces. So I think it's going to be wild. I think we're going to have these prices going for a while. Misnomers, when people think you can just open up the mothballed mines and we are going to get a big supply of rhodium, that's not the case. Then you've got to say, is there a will to do it? Because what about the state-owned electricity utility, ESCOM? What about labor, because you have to remember that if you sign on people's and the rhodium price turns, you're going to open up what was previously a marginal mine because the mothballed mines were closed for a reason. Another question is to what extent car companies can tolerate higher PGM prices and what potential alternatives are available to them, specifically the option of replacing rhodium with higher loadings of platinum and or palladium. Rhodium's high price is incentivizing fabricators to investigate the substitution of rhodium in auto catalyst. Given today's more stringent NOx emission standards, that might be more challenging than in 2008, when rhodium's first traded above $10,000 an ounce, which was the previous high. Heraeus precious metals rhodium industrial price stood at $26,250 an ounce, up 1% to February the 24th. So these metals here, gold and silver, they're child's play compared to what we're seeing with this metal, rhodium. Crazy. The thing is, it's probably the ugliest of the precious metals out there. It's not only that great to look at, but it's rare. It's worth a lot of money. And so we'll see how it plays out. But as you can see, it's not manipulated. It's not affected by the ETFs in such a way it can just keep climbing up. And my guess, based off the last statement that I read in that article, we may see rhodium go to $27,000 soon. We'll see. But I'm holding on to mine. Foolish, probably am, but hey, that's okay. I just like to have an example of all of the precious metals that are traded, and that is the case with gold, silver, platinum, palladium, and rhodium on Kitco. Let me know your thoughts below. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.